Okay, I guess we can start and I can figure out what to do about the chat later on. Okay, thank you so much everyone for joining. Good evening, good morning, good afternoon, wherever time it is where you're joining us from. Welcome to Dissecting Design episode 3. The title for this episode of Dissecting Design is Leveraging Device Financing and Mobile Money for Financial Inclusion in South Asia. My name is Manahil. I am a service designer and a user researcher at Ideate Innovation, and I'm going to be your host for today. And I'm joined by our panelists, our wonderful panelists. I'm going to go in alphabetical order. So we have Adil Ashraf, who is a service designer at Ideate Innovation. Adil served as a researcher on this project with Dialog that we're going to be talking about in today's webinar. And Adil also developed an amazing benchmarking report on device financing in the Global South as part of this project. We have Jacklin Mazumdar. She's joining us from Sri Lanka. Jacklin is originally from Bangladesh and she holds over 10 years of experience in the telco industry. So she's one of the best people to be having today's conversation with. Jackie has worked at Robi, at Dialog Asiata, and she's made significant contributions in the South Asian fintech space with Bcash and Dialog's Easy Cash. So our talk today, again, like I said, it's based on a recent project that Ideate conducted with with the GSMA and Dialog. Just to give you guys a brief introduction of our organizations, the organizations that worked on this project. Ideate Innovation is a research and design firm based in Pakistan with a focus on human-centered design methodologies. Our work is primarily centered around user research, user experience design, and business and service innovation. Then we have the GSMA, which is the Global System for Mobile Communications Association, that represents the interests of mobile operators worldwide. The GSMA encompasses more than 750 operators and 350 companies in the broader mobile ecosystem and aims to shape the future of the mobile industry through strategic direction, collaborative industry programs, advocacy, and industry events. Then we have Dialog Asiata, the organization where Jackie is joining us from. Dialog is Sri Lanka's leading mobile network operator, providing telecommunication services to millions of people and focusing on financial inclusion through its various financial services that I'm going to be talking about now. And the whole conversation is also based on two of these financial services provided by Dialog. So for this project, Ideate worked in Sri Lanka to look at two of Dialog's financial products. So you have Easy Cash, which is a mobile money product. To contextualize it, it would be similar to, let's say, Easy Pesa in Pakistan or Bcash in Bangladesh. And it's a mobile money product. So mobile money allows people to conduct financial transactions using their phones, even when they don't have a bank account. The benefits of mobile money is that it's accessible 24/7, it's super secure and convenient, and it ultimately reduces the need for people to rely on physical cash. And then the second product that we worked with was Lacy Pay, which is a device financing service where Dialog SIM holders can buy a phone on installments. So device financing helps people afford smartphones and other devices through manageable payment plans. The idea is to make technology affordable and enable access to digital services to support the overall economic growth and opportunities that they are provided with. So with this project, I'm going to take you, just for context, I'm going to take everybody through the three broader objectives that we focused on with this project. So to see how Easy Cash could improve mobile money uptake through Lacy Pay, we tried to understand where Dialog users themselves and then Dialog associates who are essentially customer service representatives that work at Dialog customer experience centers. And they directly interact with Dialog users, right? So we wanted to understand where these two user segments see Easy Cash within the entire Lacy Pay experience. After that, we wanted to understand what barriers in the Lacy Pay experience were kind of hindering the use of Easy Cash, or at these points where people could be enabled to pay using Easy Cash and weren't being enabled. And the third broader objective was, again, what opportunities in the LacyPay experience we could use and leverage to kind of increase easy cash usage and promote payments through mobile money. So again, to achieve all of that, we conducted extensive amounts of research and user research, user testing in Sri Lanka. This is a little map of all of the places that we conducted research in. So you can see we almost like covered almost most of the island. Our research, we had 37 research participants. We had LacyPay users who were obtaining device financing from Dialog. We had device associates, we had active EasyCash users, and then we had Dialog users who weren't using any of these financial products, but just had a Dialog SIM. So this was the participant breakdown. And some of our methodologies included interviews, we had focus group discussions, we did some ranking activities, some card sorts, observations at Dialog Experience Centers to kind of understand how the associates were interacting with the users and what kind of questions and queries the users had with LacyPay, EasyCash, mobile money, digital financial services in general. And then we had a few sacrificial concepts, and then we wrapped it up with usability testing. So that was kind of an overview of the project. Our aim was to kind of understand how these two Dialog products could be brought in closer together for greater financial inclusion in Sri Lanka to increase the uptake of mobile money. After that overview of the project, we're going to start off our panel discussion, but just to kind of, again, in the sense of contextualizing everything, I'm going to ask Jackie and Adil to describe financial inclusion as they see it in 3 words. So Jackie, you can start.
Thank you, Manahil. If you ask me to describe in 3 words, it's pretty hard because it's a long fact to describe. I would choose 3 words as empowerment, of course, affordability, and accessibility.
Okay, Adil?
Thank you, Jackie. So I would echo some of the same words that Jackie had used. So for me, number 1 is access, second would be equity, and third would be empowerment. So I feel there's a lot of overlap in how we conceptualize.
Yeah, definitely a lot of overlap. Always good to have shared understanding when you're working on a project together. Okay, cool. So we'll start off with the hard-hitting questions now. Like I already contextualized and defined mobile money. It's a way for people to conduct financial transactions using their phones. For example, you have apps like Easy Paisa in Pakistan or Easy Cash in Sri Lanka. My first question is, and I'm going to pose this to Adil first. Are there any major differences in how mobile money is perceived across countries in South Asia? So Adil, what is mobile money perceived as in Pakistan?
Thank you, Manahil. So this is a broad question, but I'm going to try to keep it brief. So mobile money generally is not really understood in literal terms in Pakistan, but is rather associated with the key mobile money services that we have, like JazzCash and Easy Paisa. And when you ask these users, or if you ask the general population, what do they think about mobile money or how do they perceive it? These perceptions are shaped heavily by the preference for cash in Pakistan. So cash is something which is a major attitudinal barrier to mobile money adoption in Pakistan. And this is rooted in the low levels of trust and high risk aversion amongst the general population in Pakistan when it comes towards mobile money. And this is despite the fact that mobile money brands like Easy Paisa and JazzCash are very well reputed and trusted, yet cash still reigns supreme. It might be interesting to see why the preference for cash is so heavy as compared to mobile money. And partially the reason for this is that people prefer something tangible, which is within their hands, rather than something abstract or vague, which they think about when it comes to mobile money. Yet, in the past decade, there has been a lot of growth in the uptake and usage of mobile money in the country. And Easy Paisa, JazzCash are often very conveniently used by individuals to send money back home, to their villages, towns, or from their villages or towns to cities. So there's a lot of rural urban transfers, urban rural transfers, and money flows through mobile money. At the same time, their mobile money is becoming a much more vital and significant medium for business transactions, for example, between retailers and distributors. Lastly, when you talk about how mobile money is perceived in Pakistan, it's very, very vital to mention the gender element. And according to the GSMA, the mobile money gender gap in Pakistan is the widest according to in terms of the countries that its consumer survey looks at. This has come down from 85% in 2022 to 71% 2023, but this is still really, really big as compared to all South Asian and Sub-Saharan countries that it was compared. So women in Pakistan are much, much less likely than men to be aware of mobile money. And one particular social measure or trope which might explain the interaction between mobile money and gender is that in Pakistan, women are much more likely than men to report that their family disapproves of them using as mobile money. So women are discouraged to using mobile money more than men, which might be rooted in the fact that women are essentially relegated from financial matters. So perceptions are shaped by the heavy preference for cash, as well as that general gender element to it as well. But in essence, mobile money is a growing medium within the country. I hope that answers.
Yeah. Thanks, Adil. Jackie, any
Yeah, I think,
similarities?
yes, I would agree with Adil in many manners. But just to give the context, since me being Bangladeshi, I have seen the context, the culture of my own country. And I have experienced working with Bcash, and I have seen the market. And then now I'm working for mobile money in Dialog, Easycash. Just wanted to give a little context on the culture, the difference between both the countries. So in Bangladesh, basically, if I give an example for myself, I opened my formal bank account. I remember after I got my first job after I graduate, right? Until then, I was not a banked person, right? So that's how normally the culture is. Banks are not very accessible all around the country. And before mobile money took off in Bangladesh, there was a challenge for money transfer in a regulated manner, right? I think if you all know that there are a lot of labor force who come from outside Dhaka to Dhaka, the capital city of Bangladesh, where a lot of people get into labor as in garment industry, which is the major industry in Bangladesh. So a lot of women comes for work to work for garments, right? And they have a primary need of sending the money home every month. And there was no regulated manner for that service. So people used to send money home through another person. You know, it was not safer. There was risk, unregulated process, even for remittance. It was the same challenge there. After mobile money took off in Bangladesh, I mean, that was a major problem to address when it got launched in Bangladesh, to address the section where people send money from place to place, domestic money, in a regulated manner. So on that context, actually, mobile money got accepted by the people who had the primary need of money transfer. Because not everybody has access to bank. But when it comes to Sri Lanka, it's a bit different. Here, I think when Manahil, you remember when you visited here, you have seen even a newborn baby has a bank account. That's how the culture is. It's like a gift to every newborn child to have a bank account, and people put money there. However, even though everybody has a savings account minimum, it's not active by all the people. People are not actively using. They still have the need of money transfer domestically. And mobile money actually took off in that segment where people don't have to look for a branch bank or a ATM, because in rural, the ATMs are not much available. All around the island, I think there are maybe 4,000 or something less than that amount of ATMs, where we as mobile money, as a part of Dialog, handles almost close to 50,000 retail network. So it's apparently everywhere, right? Everywhere you go, you will find a retail outlet. So I think in that context, even though the banks are accessible, mobile money still had its demand when it got launched here for the money transfer and withdrawal, because as Adil mentioned, I think it's a South Asian context that cash is still floating in the market a lot, even though the financial inclusions and the mobile money, digital money transfer, everything is taking off, but still people want cash. So I think in that context, there are some cultural differences in Bangladesh and Sri Lanka, but overall the demand is the same. That's what I feel.
Right, that's super interesting, and it makes me wonder, and Jackie, maybe you can take this question first. Considering that the population of Sri Lanka is highly banked, again, this is something we found out through our research as well. Then how do users perceive mobile banking as compared to traditional banking? Especially because with traditional banking, you already have that kind of trust established. So what's the comparison between them?
So you want to know how the acceptability among people when it comes to bank versus mobile money?
Yeah, just want to know, with the increasing popularity of mobile money in the global south, how do users see mobile banking if they compare it to traditional banking?
I would say compared to traditional banking, yes, we had our strength in the market. I mean, we still do, because again, I would like to recall that we have the highest retail network in the country. In that context, the basic need of mobile money in the country, we are actually supporting in that manner, where you receive the money and cash it out immediately, because the retail network is very much available. So on that context, I would say we are ahead of the banking process. But if the question was about not the traditional banking, but the current context of fintech, digital banking versus mobile money, there are a lot of challenges. Most of them are because of regulatory as well. So we'll get there in the next questions probably. But that's how I see it.
Right. And Adil, how do you think people perceive mobile money when you compare to traditional banking in Pakistan or in a South Asian context?
So specific to Pakistan, mobile money has been quite important in the past decade or so, because mobile money has been able to reach a huge amount of population which was previously unbanked. So the traditional banking model slash banks had failed to include and cater to a large segment of the population, which mobile money was able to. So in that sense, that's the first important point, right? Secondly, when you talk to the general public, people often do not really understand the differences between mobile money and traditional banking, because they're not very aware of the extent of services associated with both. And what they're more concerned with is just about sending and receiving money, because money is saved informally either ways for them. And when people go and open their bank accounts, when I say people, I'm trying to refer to the more underserved segments of society. They prefer mobile money because KYC requirements or know your customer requirements are much lower with mobile money service, especially when Easy Pesa started off in 2010, 2009. The KYC requirements were such that over-the-counter mobile money services just required you to show your NIC to receive or send money. And if you compare that to a bank, it has much higher KYC requirements. And today, if you want to register for mobile money, you can do so digitally, right? And it can be quite quick as compared to traditional banking, where you need to go to the branch, you need to read through multiple forms, you need to sign through multiple forms, you need to come back to the branch, and then it takes time, right? So in that sense, people often prefer mobile money when they want to send, receive money, or to pay their bills, or other use cases as well. The last point I would say, which is a bit more abstract, is that banks seem to be a much more urban and distant symbol for individuals in rural and underserved areas. as compared to mobile money services, which seem to be much more accessible and familiar. So for example, think about branches and formality which suited up individuals, which banks represent, as compared to your small neighborhood shop with familiar faces, which mobile money is like. So it becomes much more familiar and comfortable for underserved segments to just go for mobile money in that sense. And lastly, mobile money can then just be simply used on even a feature phone with USSD, right? So for the Pakistani public, I feel like the underserved segment, especially those in rural areas and remote areas, have been much more active in taking up and using mobile money as compared to traditional banking, which has failed to cater to their needs and preferences.
I think, Manahil, here I would like to add another point, but Adil just referred about
Of course,
USSD.
of
If you
course.
remember, we actually have seen a customer who was using a smartphone, high-end smartphone, also referred, if you remember, that he also prefer the USSD to use Easy Cash. And I think it's somewhat the similar context even in Bangladesh for Bcash. They have a brilliant app for Bcash, but still people still remember the USSD, and that is how I see is the beauty of mobile money. It starts with a solution that is accessible from even a button phone. That's how we say the basic phones, right? Which you can ultimately just dial a call and receive a call and do basic text message. Even with that phone, you can access a financial service, which is digital. Is the beauty of mobile money. How I see that is actually across global.
Yeah, I 100% agree. And I remember this user that you're talking about. They had a smartphone, they still preferred dialing the USSD code. And so, Adil, just to follow up your answer, you talked about how there's so many barriers to traditional banking, especially for underserved populations. What do you think then are the conditions that need to be in place for mobile money uptake, not just in Pakistan, but in the global south in general?
So that again is a very broad question and can go into multiple domains of regulatory and policy work as well. But I'm going to focus more on the stuff that can be done by mobile network operators or by mobile money corporations, right? So number one is awareness and knowledge, right? There needs to be concentrated efforts to make users realize what mobile money represents in terms of value addition. So it represents convenience and high utility, but then it also requires to move just away from sending and receiving money. There has to be more targeted messaging related to savings that you can do through mobile money, paying bills, and all the other use cases that, and even device financing, like we looked at this project, right? So awareness and knowledge needs to go up, right? And that requires concentrated, targeted marketing, especially for underserved communities. So these marketing campaigns, which focus on increasing public awareness and knowledge of mobile money, need to take into account the fact that communities often in the global south have very low levels of literacy and digital literacy, right? So that's the first point that needs to be focused on. Connected to awareness and knowledge is the fact that digital financial literacy is a major barrier, right? Why? Because low levels of digital financial literacy leads to lower delivery, uptake, use, and promotion of digital financial services. And this is much more accentuated for women in rural populations. So what there needs to be done is that programs are needed to improve digital financial literacy, which look at, for example, consumer protection, where consumers are protected from risks that can affect their financial resilience. For example, how do you spot or how do you identify scams or frauds? At the same time, how do you make much more informed financial decisions? And also improving their levels of digital literacy. Tied to digital literacy is how do you improve the customer or user experience, right? So for example, if there are applications for mobile money, how do you make applications much more accessible in terms of the language used, right? Are you using English or are you using the local language that is used by the vast majority of the population? And the UI itself needs to be tailored to those with varying levels of digital and financial literacy, right? You need to understand that not everyone is an urban, educated, sophisticated user. So the UI needs to be much more tailored with different levels of digital and financial literacy. And then KYC requirements need to be minimal. With mobile money or device financing, what often happens is that credit assessments or KYC requirements are such that unbanked populations who often do not have the necessary documentation fail to get their accounts. So KYC requirements also need to be minimal. That and the last thing is how incentivizing people, right? And this is something we also focus on the project. How do we incentivize users to use Easy Cash? What sort of discounts can we give to them? What sort of behavioral nudges can be utilized to get those incentives at the fore? So these are some of the conditions slash interventions and areas of focus that are necessary to increase mobile money uptake in the global south. Jackie? Oh, yeah.
Right. Yeah, you bring up a really interesting point about incentivization, which is our research was also based around incentivization. But Jackie, I would wanna pose this question to you because based on your work with Dialog and Bcash, you have these two different there's these two different contexts in which you've worked. What do you think are some of the ways in which people can be incentivized to use mobile money? What kind of incentives do you think push people towards using mobile money over cash or even traditional banking services?
So I think it incentivizing, of course, it comes as a part of the retention program, the life cycle program. But it also actually it doesn't begin there. It I believe it begins at the first step where customer feel that she actually need this solution or need this service in his life or her life or not, right? Making customer realize that there is this gap which can be filled up with this solution. And then it should follow up through a flawless journey, which actually Adil has already referred to get into the service. And then it should come with the wow factor of the first impression, right? Even in personal context as well, we actually refer those, right? The first impression, it stays for a long time. And if the first impression fails, that's where the loyalty goes down itself. So after that, no matter how much attractive loyalty program or retention program that you introduce to customer will still stick to the first impression that he got, which was not very wow. So we always, from EasyCash side, we always try to make sure those three things are in sync, right? You have a need of money transfer countrywide. You have a flawless journey to onboard, which is pretty simple. All you have, because EasyCash is not a bank-based service, but it's a mobile teleco-based service. So their KYC is already a part of the operator, which is Dialog. And then all they have to do is just set up his PIN and agree to the terms and good to go, right? So it's a very basic journey to onboard. And then when it comes to retention, followed by the wow factor where he can receive the money immediately and go withdraw in the next shop, comes the incentive program. So what we feel, yes, of course, cashbacks and other kind of rewards works. But since it's a operator-based mobile money service, the first thing comes is, he should be able to use this wallet other than money transfer, also to reload his mobile number, which can be prepaid or postpaid. And in Sri Lanka Dialog also, it's having wide range of businesses. It's not only mobile connectivity, they also have Dialog television connectivity, and they have a home broadband and other services. So everything goes through a cycle of either reloading or a bill cycle. So that's where we want to focus when it comes to incentive. Of course, the cashback always work because it always encourages the customer to do the next transaction because there is money in the wallet already. And also additionally, what works, because I referred the telecom part of it, that prepaid reload is a daily need. So anything to encourage the customer with additional bonus data, additional talk time, or something to do with his package always works. And I think that's how we should look into it, and we are doing that. Because if any customer, let's say, USSD users or like a basic phone user, mobile money is the first step for that customer to go beyond to the financial digital fintech journey, right? So he enters the journey with mobile money, and then he gets used to doing his money transfer, also his bill payments or reloads through mobile money, and then he look for beyond. So that's how
Right.
it is when it comes to
Yeah.
incentive. But then of course, other value added service with mobile money, cashbacks, data, bonus, reward, coin, loyalty program. We also have on Dialog service called Star Point, where we provide special points based on Dialog usage every reload. So we are connected also with Easy Cash, with Star Point. So all those things combined actually works for mobile money.
Right. So again, like Adil said, a targeted approach as to what kind of incentive works best for what user. So moving a little bit away from the mobile money conversation, again, we're also talking about Lacy Pay, which is Dialog's device financing product. And like I mentioned before, through device financing, people can afford smartphones and other devices on manageable payment plans or installment plans. And the idea is to make technology affordable and accessible. And Adil, this question is for you. So, based off of our research for this project, do you think there's a difference in the general perception around device financing or device loans in Pakistan versus Sri Lanka?
Yeah, thank you, sir. Thank you, Manahil. So for device financing in Pakistan, it's not really a common practice as compared to other markets in the world, especially those in Africa and North America. Some of it has to do with individuals refraining from financing, considering Islamic injunctions against interest payments. Others because of interest rates within financing services, consider them as financially imprudent. And others are generally very wary and cautious when it comes to financing institutions because they carry a very bad reputation in the country because of their predatory behaviors where individuals are exploited through financing services because of their low levels of digital and financial literacy. So there's this first thing around this distrust around financing the institutions, right? The device financing ecosystem in Pakistan right now is not very developed or sophisticated in terms of marketing, general awareness, or the number of service providers. There are some MNOs, mobile network operators, which are working with device financing service providers. For example, Jazz is working with KistPay, but even its uptake is limited right now because acceptability of device financing is not quite high. And in terms of the numbers, according to a World Bank study, 80%, almost 80% of customers are much more likely to get phones without financing. So what they do is they either pay upfront, they save money, or they get loans from family or friends rather than going to any other institution. And only 6.3% paid for their devices and installments, and 2.2% took out a loan from a financing institution like a bank, right? So in that sense, device financing is quite limited as of right now in Pakistan. On the other hand, Sri Lanka, relative to Pakistan, device financing in Sri Lanka is much more common, with religious issues around interest payments not really present, and just based off Laissez-Pay's presence in the country, we see a much more sophisticated and developed ecosystem with more active marketing and general awareness. However, at the same time, I would like to point out that with the recent economic downturn in Sri Lanka, individuals have lost the financial capacity to invest in phone, which represents a major problem because of lowered affordability. But it's also a major opportunity for device financing services because device financing makes it much easier to get a phone because of lower capital. So in that sense, there is this window of opportunity in Sri Lanka. For both countries and the wider global south, I would again point towards the gender element. So according to the GSMA, women were much more likely than men to have used any financing strategy for a major purchase related to a device or even irrespective of a device. So for any major purchase, they do not really rely on financing strategy. And this is also true for people living in rural areas compared to their urban peers. And based off our research on a project that we did earlier, the credit pair project, we found that women feel that there are a lot of barriers to accessing loans and installments, which include lengthy processes and documentation requirements, where they have to have a financially stable witness, they need to be of certain ages. So in terms of gender, we do see device financing varying. We do see device financing varying between rural and urban. And in general, Pakistan is much more limited as compared to Sri Lanka. If there's anything I've missed about Sri Lanka, maybe Jackie could add about device financing in the country as well, relative to Pakistan. But thank you, Manahil.
Thank you, Adil. And before you answer Adil's question, Jackie, I also kind of want to add my own question to it. This was one of the learnings that we took away from the project. Either the perception of device financing in Pakistan versus Sri Lanka, it was very different. Were there any other key insights that you found valuable when it comes to driving mobile money uptake through device financing, particularly? What would be those insights?
So Manahil, correct me if I'm wrong, you are asking the recommendation, is it? The learnings and from our project, right? So device finance actually is the most unique solution, I would say, that we have launched in Sri Lanka from an telecom operator perspective. I know even in Bangladesh, the telecom, I worked for Robi Axiata there, so they are still evaluating the project. And this eventually opens up a customer to upgrade his lifestyle through a mobile experience, of course. Sometimes we have also seen it's not only a non-smartphone to a smartphone upgrade, but sometimes a lower grade smartphone to a higher grade smartphone upgrade, right? So the learning basically was very interesting when we were doing the research through you guys. Some of the key insights I have found out is people want clarity. People wants to know if they are eligible, why they are eligible, and what are the things that is as a conditions or terms that is coming along with. They don't want to know about the solution and then they have to wait and walk into another experience center to know details. So they want the clarity then and there as a part of the user journey. That was the first identification that when we were doing the survey. And then of course they want further information. If I am not eligible, they seek for information, how can I be eligible? So those informations are very important. Of course, they see it as an inclusion in their life in a very easier manner because, come on, like when we talk about device financing, like installment plans or, EMIs, this all very bank-based solution, or you need to be a certain criteria-based client to enjoy those. You have to maintain certain parameters. When it comes to dialogue, what we have launched, Lazy Pay, is truly based on, the user's history, how they have used telecom product or dialogue products over the years since they have got connected with the telecom operator. So the acceptance in the market for this solution was beautiful. People appreciate, but the clarity they want, that's their first priority. Few other learning was also, they when it comes to incentivizing through the solution, they want to get rid of the loan pretty faster. They don't want to drag it for a while, but they will also want to see if I finish it faster than the expected timeline, what's there in it for me, is there any benefits. So a few other things, I think there you will be asking those questions in a latter part.
Yeah.
But those
Yeah.
are the first two things I think I would like to highlight at this point.
Right. Thanks so much for that, Jackie. I think that was one of the commonalities that we found based on our previous project in Pakistan, the fact that people just want to complete their loans as early as possible. And so because we're talking about recommendations and our learnings from this project, Adil, would you like to take us through some of the design changes that Ideate proposed to improve the user experience for device financing users? Would you like to go through them?
Yeah, definitely. So one of the key insights that we found through our user research and benchmarking was that to encourage users to take up mobile money, there needs to be an effort towards incentivizing them, right? And with incentives, you can't just have incentives without making it clear what the incentives are. So within the UI, if you look at the first screen, there's no such reference to the incentive per se, right? But with the proposed design changes, what happened was that we prominently displayed the incentives at the important payment touch points, right? So when the person is confirming the transaction, there's a very clear banner which says you can get a 5% discount if you pay with Easy Cash, which is the mobile money, right? So having that there motivates users to interact with them, which leads to them taking up the reward, which leads to more mobile money uptake, right? And when you end up applying that discount, you see it over there where now instead of paying the amount that you were, you're now paying a lesser amount, right? So you then get that messaging as well that you've taken up that discount. So getting the incentives there and then also integrating them within the UI is one of the changes that we proposed. The second one, so the second one revolved around how do we make the user much more in charge of the payment plan, right? So how long the loan duration will be, how much their security deposit or down payment would be, right? So if you look at the original design, there was a lot of information there which had a certain visual hierarchy, but which gave no certain control to the user around how long their loan period would be, how much their down payment amount would be. So if you look at the proposed design, what we did, and in the third screen, you can see it in much more a zoomed in version, you can see that the user themselves can choose whether they want their loan payment plan to be 3 months, 6 months, or 12. And once they choose their months, the time duration, they can also choose the down payment amount. So obviously they can't just choose any down payment amount. This is set between certain ranges, which makes financial sense as well. And once they do that, then they have much more control over their payment plan. And the important UI integration over here was that of the slider, because it seemed to give the user much more granular control in making a plan that suited their needs the best. So these were two design changes that we proposed. There were much more, but because in the interest of time, I thought we could just discuss two right now.
Yeah, thank you so much for sharing these. It's really good to see the recommendations visually as well. And obviously, a lot of primary research and user testing went into this. But Jackie, have you also found value in looking at other global markets and products when you're determining your business and product strategy in specific? So any markets or products that inspire you when you're determining your strategy, your product strategy, or your business strategy?
Sure, of course. I mean, we continue looking at benchmarking other markets, other solutions to make our service better. It's a continuous process, right? I think for any digital service, that's how we do it. But when it comes to even benchmarking, I think I would like to actually add here that I think it's only Easy Cash that as a mobile money aspect where we are offering customers in Sri Lanka send money, like money transfer is absolutely free without any transactional limit. However, yes, we also have a daily transaction limit based on regulator. But even in Bangladesh, it's getting charged for money, sending money. I'm not sure. I think it's even in M-Pesa in Kenya. How about Zaz? Is it still getting charged for money transfer? Is it a charged service? I think yes, right? So in Sri Lanka, it's absolutely free. So that's where I think the key aspects comes in. There are a lot of gamification a mobile service strategy maker can do in terms of pricing. That is one strategy we always look around, and we always want to make a balance between the consumer solution and the market benchmarking. Of course, innovation has to be there as a priority. And since the growing market, if there is no innovation, no service or product can sustain in the market, right? Of course, we continue our survey, our consumer call out, even research to understand what's the context of mobile money in the market. Is it changing with time? To understand customers' demand and the value. We analyze customers' insight from our data as well. And of course, the successful models all around the globe, we try to accept. We have enabled, like other global market, we also enabled the QR service in Sri Lanka. Few years, actually during COVID, it was pretty high from the Central Bank of Sri Lanka as well, that we have launched Lanka QR in Sri Lanka. So that also has not become only a part of banking service, but also mobile money. And we were actively driving all those services for people who knows how to use a smartphone and get the context of a Lanka QR payment. We always had the merchant payments on our USSD where a person doesn't need to have a smartphone, but still pay to purchase his regular things from a shop where Easy Cash is available. And then we also do our competitive analysis, our market positioning. Because Sri Lanka as a South Asian market, we actually benchmark not directly with Bangladesh because the cultural context is a bit different where the banks are highly accessible in Sri Lanka and everybody has a bank account. It actually matches with the context of how Malaysia is, where banks are definitely accessible, but also Boost being the service is also driving there. Mobile money is also highly driving. So those kind of strategies, sometimes we try to match and see how we are coping up within the Sri Lankan market. And out of all of this, of course, the regulatory, of course, plays a very crucial role because there are certain things that even if we want to innovate based on the market demand, but hands are tied sometimes because without regulatory approval, we cannot do things. And sometimes, I mean, we were having a daily transaction limit even last year for our upgraded Power Wallet, which was in the context of financial instability in the country, was not enough. So we had to go and discuss this with Central Bank, and this year we have increased with their approval. So all these things, I feel that needs to be correlated and has to balance each other in a single manner and needs to move forward together. Otherwise, it will not, the strategy will not fall into places.
Yeah, that makes a lot of sense. Thank you, Jackie, for that answer. And I just want to say we keep talking about these underserved populations, right? So just to make it clear to everybody in the attendees, in the context of this project, we were looking at underserved populations, and by underserved populations, we're referring to groups of people in Sri Lanka or in the global south who have limited access to traditional financial services and digital technologies. So this can include rural populations, low-income individuals, women, unbanked individuals, people in the informal economy. So by improving their access to phones through device financing, these communities can also be a part of the financial ecosystem, and they can also save and transfer money securely. They can access loans and credit, and they can participate in the digital economy, basically. But Adil, if I wanted to ask you a question, I would ask you, how do you think device financing services can be designed in a way that maximizes its impact to reach the underserved populations that I've just talked about?
So there is a lot that can be said about how do you make device financing services much more human-centered. I will point out 3 to 4 main considerations. The first one is that, are you offering an affordable and diverse device portfolio? There's no point in reaching out to underserved communities with high-end smartphones, right? So what you need is a diverse and affordable device portfolio, which has entry-level smartphones, it has low-end ultra-budget smartphones, because affordability is a very, very major barrier to a lot of people within low and middle income countries, right? So this is a necessary step in allowing low income individuals to access device financing service. Um, and even having a diverse device portfolio reflects the needs and preferences of a wide range of user segments. So that's the first point. The second point I would say is around easier credit assessment and know your customer requirements. So currently, what happens in device financing services, especially ones that are offered by mobile network operators, there's a lot of investment in credit assessment from the service provider side. So the user has to provide information related to how much how credit worthy they are, right? So oftentimes what happens is that device financing is only offered to individuals when they've been a customer of an MNO for a year or 18 months, right? So for device financing services to become much more accessible to individuals from underserved communities, credit assessment needs to be easier, right? And there's something which is referred to as alternative credit assessment, which has increased in popularity, innovation, and effectiveness throughout the global south, where you can look at utility bills, you can look at household expenditures, you can look at how people are shopping in their local retail stores. And based on that information, third parties can assign credit scores to individuals, right? So to cater to unbanked, underserved, and digitally excluded communities, there needs to be a shift to alternative credit assessment systems, which some device financing services are doing. For example, M-Kopa and PageWare, right? The third thing which I would talk about would be flexible payment plans. Not everyone has a predictable monthly income where they can then pay their equated monthly installment, right? So what there needs to be a focus on is that device financing programs should be looking at providing flexible and adjustment repayment terms to users, right? So rather than binding users to fixed equal monthly payments, users can choose between daily, weekly, and monthly installments where they can pay variable payments, right? And this helps users with variable and unpredictable incomes to pay their installments in a much more timely manner. The fourth point is around on-ground mobilization and targeted marketing. You can't really reach the underserved communities just through social media or SMS or putting up billboards. To reach the truly underserved communities, you require on-ground teams to visit communities for marketing and registration purposes, right? This is especially true for remote and rural areas, which are cut off from experience centers and dominant marketing mediums. So these four are some of the ideas that I would look at if you want to make device financing much more human-centered. You need to provide affordable devices. You need to make easier credit assessment. You need to make flexible payment plans, and then you need to go on the ground for mobilization and targeted marketing. These are some of the key ideas that I think are valuable.
Thanks, Adil. That was really cool. Thank you for summarizing so many things in like a little informative answer. But based on what you said, Jackie, I'm going to pose this question to you, and this is the last question. Because you've worked in Bangladesh and Sri Lanka, is language a barrier to the uptake of mobile money or device financing? And if it is a barrier, how do you think we can address that barrier to make sure that mobile money is truly accessible and inclusive to these underserved populations?
Okay, in terms of, I spoke about innovation, right? So when we want to talk about language yes, there are some, a beautiful thing in their app, which is like a voice instruction. When it comes to Sri Lanka, of course, there are multiple languages are being in practice, mostly Sinhala and Tamil. So to address that, of course, all our channels for mobile money has been translated into all trilingual languages. So we cover English, Sinhala, and Tamil. Because yes, sometimes it is a barrier when it's a country where multiple languages are in practice. And we have heard people, even though probably we always communicate to customers based on the data that they have provided, right? If a customer has opted in for a Sinhala solution for his USSD or his app, we consider that customer as a customer who is comfortable with the Sinhala language. So when it comes to comms, of course, I will send him the Sinhala communication. But sometimes it has happened. We have seen that people, informed us even in the research saying that I get communication in English, but I prefer in Sinhala. But he gets in Sinhala, he prefers in English. That sometimes happen because probably multiple SIMs are getting used in the same under the same person's identity. Usually that's has happened in South Asian context, right? The parents gets the first connection for the child, and then child continues until he moves to another connection identified under his national identity. Even other than that context, language, I think people prefer, even though a person who is very fluent in English, the communication when it comes to personal communication, they prefer their own dialect, their own language to be communicated, which is also very important when it comes to community-based communication in their local culture, in their local dialect, whatever the local practices is popular in that region. People accept those. So it's not only the digital solution, but also in the on-ground communication. It's very important.
Right. That, and again, that's one of the major learnings we had from our research as well, how language and colloquialism in language and in your digital products is so important for people to kind of understand the offerings better and be able to use them better. Okay, with that, we're at the end of our questions. If there are any questions that the audience wants to ask, we can take maybe 2 or 3 more minutes because we're a little over time. There are 2 questions that I have here. So this question was for Jackie, but I think you kind of already answered it. The question is, how did the 2022 economic crisis in Sri Lanka impact the mobile money market? You've kind of already answered it, but if you want to take it further
I
ahead,
mean,
you can.
yes, I mean, I have spoken about how it has impacted our daily transaction limit. At one point, it was not enough at all, and we were getting continuous requests from customer because of the exchange rate fluctuating, the money coming, especially for remittance. We have a lot of dedicated customers who use mobile money to receive remittance in their wallet. It was not enough. So we had to discuss with Central Bank of Sri Lanka and then get a solution. It was a tough call because every process, every approval takes time. But eventually we got it done. So yeah.
Right. So Azim, I hope that answers your question. There's an anonymous question we have for Adil. Is there any academia that guides your practice that would be helpful for people to want to learn? What is the question? I'm sorry, I can't. This question was about how you would understand and define the global south, and this person has just changed it, I think.
No. So there was the question around it, which I answered over there. So
Okay, you type the answer.
I'm
Okay.
wondering how you've gained an understanding of the global south, or if you specifically mean South Asia. So whoever asked this question, essentially for the project, we carried out a benchmarking study, which focused on 7 different device financing services. For example, we focused on Kenya, Nigeria, Mexico, Sri Lanka, Pakistan, South Africa. So we were able to get a lot of insights from different countries from the global south. And then obviously, because when we were doing the benchmarking, we looked at a lot of material and talked to industry experts from the GSMA. We were able to develop an understanding of the wider processes of the global south.
All right, thank you, Adil. And I think with that, we are at the end of our discussion. Thank you so much, Jackie and Adil, for joining us for this conversation. It was really interesting and it was really amazing to revisit the project again, and kind of relive all of the amazing insights that we uncovered. Thank you so much to everybody who took out the time and joined. I'm so sorry for whatever technical issues that we ran into, and also we're going a little bit over time, but I really, really appreciate everybody who stayed for the duration of the whole thing. And yeah, if you want to connect with me or Adil, these are little QR codes that you can scan to reach us on our emails, on our LinkedIn's. And yeah, I think that's it. Thank you so much, everybody, for joining us. Again, I really appreciate it. And I hope you guys are really taking some of these insights away with you after this session, like we did after this huge, extensive project that we did. Again, thank you, Jackie. Thank you, Adil. And yeah, I hope everybody has a good day. Thank you for watching. Bye.
Thank you,
Thanks,
Manahil.
everyone. Take care. Bye-bye.
Good night.
Bye.
And if anyone has more questions, they can reach out to us on LinkedIn.
Yeah.
We would love to connect with you.
Okay. Thank you. Bye.